Hey guys, and hopefully you can hear me okay. I've been messing with this microphone for the past few minutes and troubleshooting Streamlabs, so I can definitely relate to people that do content providing for a living. So if I'm kind of blocking myself and buried in the microphone, I do apologize, but hopefully it'll come through okay. Basically what I want to do in this video, and I haven't made a video in quite some time. I made one back in probably at this point, I think 2019, talking about Coinbase, telling people, educating them on how they can get started in terms of cryptocurrency, and kind of Coinbase being that gateway, the simplest way to get involved. But I wanted to get more of like a macro perspective and sort of update things. Currently it's 2021, it's actually July 9th, and I just want to give a little bit of perspective as to myself, kind of my bio, what I'm doing. Currently working like 70 hours a week as a nurse, which most of my colleagues think is absolutely insane, and probably it actually is. But for me, I'm definitely at this point dedicated like never before to investing, and particularly investing in crypto. And just to go back a little bit, a few years back, so I have a background, and these are some like entry-level positions, nothing really, nothing like high executive level, of course, but have been in banking and finance before. I worked for Bank of America Home Loans and Insurance Division, which was previously Countrywide Mortgage. So I worked there doing some processing during kind of the peak of things before they started to go south, and did kind of 180 during just the mortgage crisis, doing some processing and things of that nature. So kind of in the belly of the beast. Also worked for an insurance company, Transamerica, and then right before I became a nurse, actually, I worked for a company called Raymond James Financial out of Tampa, and just kind of moving people's money around, mutual funds, and really getting a sense of how poor I was. To be honest, really gave me like a lot of perspective. But always had an interest in technology. My brother actually taught me many years ago how to build computers from scratch, so I got really interested in hardware and putting motherboards together, or CPUs, things of that nature. And I didn't really know about Bitcoin really early on, but I did find out and get more involved with it. It's just sort of a thing in passing, but I did really get into it around 2017. And it was actually a friend of mine that was going to Harvard, and she also was like in MIT circles, but she had a professor that was doing something with Ethereum regarding banking, or something with a credit union. I don't remember the specifics of it, but I really got into it during the last market cycle, which was more of a retail hype cycle versus what's been going on here in like fall 2020 going into here in 2021 with a lot more institutional involvement. But I want to talk about Bitcoin, market cycles, psychology. So touching on a lot of things, but really just a lot of thoughts that I've had, and hopefully it can be something that is beneficial for you, the listener, for people that are more on the retail side, because there's so much to it, and I've made a lot of mistakes actually along the way, and that's why now I'm just more dedicated than ever before to this. And of course, I'm wearing my scrubs. I'm actually going to be working tonight, so I'm just working ravenously, investing as much as I possibly can, because I really see the next cycle coming. Now I actually have a realization as to the market cycles and how things are absolutely manipulated. So just to go back again, 2017, that was more of a retail cycle. You had a lot of interest in terms of the potential as to where cryptocurrency could go. You had Ethereum, but there really wasn't a lot going on in terms of decentralized finance. There weren't the NFTs, all these things that were going on. Of course, Doge was actually around at that point, but it of course was that meme coin. There wasn't really Elon Musk, or I don't know if I should mention his name, but there weren't any billionaires pumping Doge or anything of that nature. So it was still somewhat at its infancy. And just going through that phase, learning how to purchase, where to purchase. Binance, of course, at the time, Coinbase, now it's Binance.us, which I considered a very watered down version of of the true Binance, but getting involved with that, Exodus, storage, how to store cryptocurrency, how to move it around, and getting a real sense of it. Now, in 2017, it was more of a learning curve for me, because there was just a lot to consume, and I was ravenously consuming as much as I possibly could, but it was definitely a learning curve. And then things kind of, topped out at the end of the year, in 2017 into like early 2018. But I was still definitely involved, purchasing cryptocurrency where I could. But I did actually end up moving. My life changed a little bit. I still had some cryptocurrency holdings, but ultimately I put it to the sideline a little bit, and absolutely to my detriment, as I would later find out. So kind of fast forward to 2020. I won't say the name of what happened. I'll just call it 19, just for algorithmic purposes for YouTube. But I was working actually in my unit that was converted to a COVID unit, so I was getting crisis pay. So I was in a really good position, actually. Ended up investing in some gold and silver, which I thought for me was a good play. But I kind of went on the off ramp a little bit there in terms of crypto, and again paid the price dearly as things really started to ramp up exponentially in the fall. But I want to just kind of harp on that too, in terms of the cycles, like the cyclical pattern, because really what I noticed too in 2020 is, and I'll touch on a couple things here. So there's, I'll just say, as far as corporate interests go, there's always an interest in whether you're on a certain political side. It could be either side of the aisle. There's always an interest in keeping you engaged on a particular platform and keep your mind there, whether it's necessarily for your personal enrichment or not. There's definitely an interest in keeping you within a certain mindset, and even playing and manipulating on certain fears. And there's historical precedent for this as well. And I'm no different. Even sometimes if you're aware of this, and then you kind of get caught up in it, and then maybe after the fact you realize, oh wow, I kind of fell for this again. So I was definitely more into watching the news constantly, as a lot of us were. I kind of misallocated my attention, as I would like to call it, with social media, with the 24-hour media, and I think that also kind of ties into like the market manipulation, the market psychology, because you do have these 24-hour news services. You have 24-hour. There's one particular 24-hour business channel that, this has been exposed a few or several times before, that a lot of times the information that they're giving to us as the retail people is actually counter to probably what the actual thing we should have done was. So if they're saying, you should buy something, you should sell it. If you should sell something, you should buy it. But there's something that really illustrates this. There's a model. And there's a guy called Uncomplicated, is his channel, so I'll give him some credit. But he's kind of popularized this. But there was a theorist back in the early 20th century, I think late 19th, early 20th century, called Wyckoff. His last name was Wyckoff, and it's called a Wyckoff distribution model. And it goes into market manipulation patterns, because the idea is, if you have a finite resource and you want to derive or gain as much value from that resource as you possibly can, the idea is, and this is through, or the manipulation is basically through narratives that you push through different outlets, like the media, for instance. So say, for instance, you want the price of something to go up that you have a large quantity of. You push positive narratives out in the media, so you get a lot of people, mostly on the retail side, called FOMOing, or fear of missing out, FOMOing into something, because they don't want to miss, they don't want to miss the boat. They want to get involved. They want to invest money because they want to see a profit. So, and as this is happening, as they're driving the positive narrative up, they're actually slowly selling off. And then once things kind of peak out, or top out, then what they do is they start to change the narrative to a negative narrative. Then they start to push out negative stories, negative information, to actually instill fear within the market, so things can start to sell off. And then once that's happened, they've already sold their bags or their holdings at the top. And then the retail people, they're getting very, they're getting scared through the stories. They don't want to lose their money, so they start selling and selling and selling, and then things go back to the bottom. But then what happens is, as the people that are driving that negative narrative are pushing everything to the bottom. They're actually acquiring that same asset again at a reduced cost. Once the cost has been reduced, they're acquiring it for, you know, long duration of time, whatever it might be. And then once they're ready, they've acquired as much as they want at this discounted rate, then it's time for them to drive that narrative back up so they can start the cycle or start the pattern all over again. And you know, and it happens over and over again. And even myself, like there's people that I know even currently, because a lot of things the market's corrected, you know, 50 to 60%, I think, you know, generally speaking, from the peak 3 months ago. And even there's a colleague that I was just talking to, and I was mentioning, you know, Algorand and a couple different I think Stellar Lumens and different cryptocurrencies, and like, well, you know, it's crashed, you know. And I'm like, no, this is exactly when you want to buy, obviously, because the price is reduced. Because what happens in this market, what happens in the cryptocurrency market, particularly every 4 years, you have a halving, or basically what happens is the equipment that's used to mine and essentially create Bitcoin, for instance, the reward is cut in half for the same computational power that was used prior. So it's a deflationary mechanism. So every 4 years, it follows this pattern. So you have a 2013 cycle, you have a 2017 cycle, and now you have a 2021 or 2020 to 2021 cycle. And then most people are saying actually now that this reflects more of a 2013 Bitcoin cycle, where you have two tops. So you have you have the one top that, you know, we already reached back in I think it topped out around April, and now we've had a retracement of like a correction, but basically it's going to go back up again because all the indications are positive. There's not really anything fundamentally that's changed, right? But again, a lot of people that don't understand the cyclical nature or don't have the historical kind of macro perspective of the crypto market don't understand this. And a lot of these people they're called whales, the people that have a lot of cryptocurrency, or it could be even in traditional markets, it could be people that have a lot of stocks, but the people that are the market makers or the market movers, right? They understand this, and the institutions are absolutely involved. But the crazy thing is too, with this manipulation, a lot of these same institutions are the ones that, now that they've openly, ostensibly, or rather they've said now publicly that they're acquiring it, they're buying it, they're incorporating crypto, they're offering custodial services so they can actually sell it to you, the retail investor. These same people, back in 2017, like a certain individual that's the head of JP Morgan Chase, Jamie, I'll just say his name, Jamie Dimon, was saying the exact opposite, saying that, oh, we are actually going to fire people that are even invested in this market because it's dangerous, it's speculative, it's only for people that are using it for nefarious purposes. Now, mind you, there's no entities that have more blood on their hands than banks, right? But of course, this is risky, this is dangerous, we don't want you to get involved. Oh, but wait a minute, a few years later, now it comes out that we've been buying it while we've been telling you, the retail person, oh, it's speculative, it's dangerous, it's volatile. You don't want to get involved in that now, would you? And this same narrative has been repeated many times. Even during the I was watching a story. I think it was a special with. I don't recall the name. Apologies. Maybe I'll link it below. But basically, they were talking about how this was done back in the late '90s too, during the tech boom. How a lot of these stocks, these institutions that were kind of late to the game, they would push negative narratives saying, you know, this is flimsy, or it's not a solid investment. You need to sell these tech stocks like Amazon, Yahoo, all these different companies. Nothing's going to come of it. And then as they were getting the retail people to actually sell these things off, then they were acquiring it again at kind of accumulating at a discounted rate because they had pushed a negative narrative to get all the retail people that would have otherwise made a lot of money over the 10, 20 years. I mean, look at Amazon stock now. I mean, at one point it had dropped like 85%. So it's the same thing that these people do over and over again through this manipulation. It's just absolutely disgusting. But as you see the patterns, and you can become more emotionally detached, but that's what they rely upon. They rely upon the fact that they're going to manipulate and play on your emotions and your fear to get you to do something that's not in your best interest, and to do something that's not rational, that's not logical. I think in the next video, because I want to make this brief, it's only 15 minutes, I want to show actionable things, because it's absolutely absurd that the banks right now, they, for whatever you deposit, they give you, and this is, I was looking at Chase Private Client, I want to say they offer you 0.01%, and this is if you have a large holding in their savings account. So this is supposed to be for their like private clients, so their elite clients. You're gonna get for, I think, maybe $10,000, $5,000 to $10,000 in savings and deposit. You're gonna get a return of like 0.01% or something absolutely absurd. Not even an entire percentage point, which is absurd when you actually look at that compared to inflation, particularly now with all the money printing that we've been doing over the past year to 2 years. So it doesn't even keep pace with inflation. So you're losing your money. So come to us, put money in our bank, so that you can really lose money. When you compare it with the purchasing power, you're essentially losing money. But then with that same money, we're going to amplify it by fractional reserve lending. We're going to lend it out, amplify 10 to 100 times, and then on top of that, we're going to charge interest for it. We're going to give you nothing for your money, and they're going to charge you exorbitant and frivolous fees. If you overdraft by $7, we're going to charge you $35. We're going to charge you maintenance fees. It's just ridiculous. But a lot of these platforms, and this is what the banks are really afraid of, a lot of these platforms, you can stake a stable coin, which is pegged to the US dollar, get anywhere from 8 to in the low double-digit percentage point return, 10, 12%. Even on the cryptocurrencies, not the stable coins, but cryptocurrencies like Ethereum, Bitcoin, or some of the other ones like Algorand, Cardano. Some of these also you have staking rewards. So if you just have it on a platform sitting there as a reward for you putting it on a particular platform, they're going to give you 4, 5, 6, 8%, right? Just for having it there. So it's not stagnant. It's not sitting there losing money to inflation, losing purchasing power. And that's what a lot of the pushback is coming from these banks, because the traditional system is what they want to retain ownership of that, retain power, because through that power, they can manipulate you, they can manipulate all of us, they can kind of keep their thumb on everyone, even sovereign nations, even looking at, for instance, El Salvador adopting Bitcoin as a national currency, and then of course the IMF is pushing back against them because, oh no, we don't want that. We don't want you exiting our system where we can manipulate and control you, and then you're under the thumb of the US dollar. Like, we don't want that. We don't want you to exit the system. So we're going to give you obviously a lot of pushback there. So there's so much to this. I'm going to start making some more videos, maybe some instructional videos, and definitely in terms of just staking, maybe some soft and hard staking. Soft staking basically just means that you're not locked in, like there's certain lock-in periods, so you can put it there, you can get interest, but then you can also move it off a platform. Hard staking is typically just, you have to lock it in for a set period of time, maybe 1, 2, 3 months or longer. But usually if you hard stake it, lock it in, you usually get a little bit more yield that way. But again, I think I'm going to just cut it off here just for algorithmic purposes, going on 20 minutes. But I'm going to start putting some more content out here. Obviously, like I said, I'm working 6 to 7 days a week. I have another job where I'm just loading into cryptocurrency. That's basically all I'm doing, just with anticipation of the next run up for this bull cycle. Because as most people are saying, this is just kind of a correction or a lull, but we're still in a bull cycle. So we'll see. Even if not, I mean, even if 1 year elapses, I mean, even better. I can load into more positions because, I mean, even if looking at Bitcoin over the past 10 or 11 years since its inception, has gone up 6 million%. So even there's a popular let's say content provider influencer, but his name's Plan B, and he is someone that popularized this stock to flow model, which is really using the metrics that you would use for kind of metrics for value of a stock in traditional finance, using that same kind of metric for Bitcoin. And he even put out an article, I think, where he was saying anyone that's involved in this market within, the stayed in it for at least 3 to 3.5 years has become exponentially more wealthy. So that's the power of the market. So it's not, get rich quick. And maybe it's get rich on the short to moderate term, not really even long term. Because, I mean, 4 years is 4 years is nothing. I mean, 4 years, if you look at a college degree, I mean, you can, before you even know it, 4 years has elapsed. So if you just stay in the market, you can become emotionally detached, not look at those daily swings of volatility. You're okay. Because actually, that's a good thing. Because if there's volatility, that's where you can actually get those exponential gains. Because if you have something that's safe, you know, if you're risk averse, you know, and you want something that's safe like a mutual fund, then maybe it'll get 3-4%. It's safe, but I mean, unless you're going 20, 30, 40 years, you're not going to see a massive return on that. Now, something that has the volatility, you know, that crypto does, you're going to see those gains. But if you look at the logarithmic pattern of these markets, you know, Bitcoin and everything is usually tethered to Bitcoin. It's always up and to the right. Let's see if I can do this correctly. Let's see. Up and to the up and to the right, up and to the right, up and to the right. I think I did it reverse, but anyway, you get the idea. It's always on the long-term trajectory going up. So if you can weather the storm with these patterns, with the lulls, with the dips, then you will come out the other side wonderful. You'll come out shining. But I think I'll cut it off here for now. If you've stuck around for 21 minutes, thank you so much. Maybe I'll put some musical backdrop to this, maybe do some editing and jazz it up a little bit. But for now, thank you so much for listening. This is James Solomon, and until next time, bye guys. Thanks.